Hey, what's up, guys? Welcome back to another episode of Filling Your Cup. I'm your host, David.
I'm your other host, Calvin. What's up?
And today we're going to talk about, forbearance. Since forbearance is coming to an end, we're going to talk about if that will cause a housing crash or not. So I guess, Calvin, take us off.
All right. So, what is a forbearance? Forbearance basically means that your lender or your bank allows you to pause or reduce your monthly mortgage payments for a limited period of time. So, under the current CARES Act, homeowners with conventional loans can ask for initial forbearance for up to 6 months. And they could also request an additional 6 months up to totaling up to a year of forbearance. So, for example, if you ask for a forbearance, April 1st last year, your forbearance would expire April 1st of this year. So, what happens next after your forbearance expires? What can you do? So, you have options. So, option number one, you could pay it all back, full repayment of the uh, one lump sum of the whole year or 6 months or however you took off.
Mm-hmm.
Number two, intermittent payments that will allows you to have payments up to of 3 months, 6 months, or 12 months, whichever makes sense. Given your financial situation or whatever that may be. Number three, you could lengthen your loan term and pay off the missed amounts at the end of the extended loan term. Basically, you tack that off at the end. Number four, payment deferral. This option lets you pay off the missed amount when the home is sold, refinanced, or at the end of your loan term. And number five, you could pursue a loan modification, and that fun details you have to work out with your lender. So just letting you know you have options. But once you exhausted all five of those options and you still can't repay your mortgage, or you can't pay your mortgage, will there be a crash?
That's a good question. We don't have a magic crystal ball, but we can, take some educated guess. So I guess when people talk about housing crash, right, they think about the 2007 housing crash. But right now, if there's a huge difference between 2007 and the current housing environment. So back then in 2007, a lot of homeowners have negative equity in their homes. That means their homes was worth less than what they purchased for, and they didn't have any equity in it because back then everybody all the banks just gave everybody a loan. As long as you have the post, you can get a loan, and which that it drove up the market the home prices for all the markets like in a really short period of time. So you didn't give you an opportunity to build any equity in the homes. Like literally one week you can buy a house for 200K, next week 400K. I mean, did you really get 200K of equity? I don't think so. I mean, that's kind of like just inflation. So I mean, that's just what happened in 2007. So when everybody couldn't pay pay the mortgages, right? Because the market was crashing. There was a massive volume of foreclosure that hit the market, which means there was a lot more supply than demand, right? In the current market situation, a lot of people have positive equity in their homes. So that means that even if they can't pay their mortgage or they're still unemployed, they gotta get rid of the house, they can still sell their homes and they still positive. They can still pocket the positive equity in their homes, right? And this brings it to my next point which is also that the banks are they learned their lesson, I hope, from the 2007 meltdown, and they are more willing to work with the homeowners these days. So Calvin mentioned about the modification of loan. A lot of people, they could work with the bank to have the balance be deferred to the end of the loan. So they don't have to owe it pay anything up front, right? So right now they just have to worry about the current payments, and all the missed payments, it goes tacked in the end. And this does provide the best you know result for the bank and the homeowners, because foreclosure is a really expensive process, and nobody wins in a foreclosure. The banks get all these inventory, but they can't do anything with it, and the homeowner loses their home, and they have nowhere else to live. So it's like a lose-lose situation, right? So I believe the banks are more willing to keep people in their homes and not just foreclose on them. So that's like another reason why it's not, I don't think it's gonna crash. And lastly, the supply is low and demand is still high, right, Calvin?
Right, exactly. So the housing stock is in very, very short supply because of the mortgage crisis. You know, they don't want to put all the supply out there when houses are being foreclosed. So as a result, you know, houses supply is very short right now. And interest rates are really low because of the, you know, Fed's lower interest to kind of stimulate the economy, um, making home ownership really economically advantageous right now. And lastly, go
Yeah.
ahead.
So Biden, I in the making of this video, I haven't confirmed it, but I think Biden did propose a 15,000 first time homeowner buyers tax. So give you a little incentive to buy homes, and this would also create a surge in demand. And I mean, at the end of the day, we both feel that there won't be a housing crisis, because if you look at the current, even not just a Bay Area market situation, when a new home gets listed, there's like 15 offers within a day, right? It's like it gets locked up quick, and that might not apply to all the places in the other cities, but the general consensus is, if you live around a city with with jobs, I feel like there's like a really good chance you can't really get a home, because one, is too expensive, and two, there's just too much demand, and the point that there's a short supply. I don't there hasn't been a lot of new homes being built since the 2007 crash, because people feel like, hey, last time we had this many homes, we had a crash, and people can't afford to buy these homes, so we're just not gonna build that much, and we're just gonna let the price artificially get pumped up because of there's less supply, right? So I don't think there's gonna be a housing crash. There always could be a correction, but correction just means that no one's gonna sell the homes. They're just gonna hold on to it, because why want to sell it? Everybody needs a home to live in, right? So I think for short term couple years, like 3 to 5 years, I don't think there's gonna be a crash. I think everything's just this is gonna keep perking up slowly, and I think homes actually gonna get even more pricey. What do you think, Calvin?
I agree. I agree. You know, people are, you know, worried about inflation and things like that nowadays. So they're looking for new ways to invest, whether it's in the stock market or housing market. People are gonna put money into those areas. So that's only gonna, you know, bump up the housing prices even more and make it harder for us first-time buyers to get our feet wet into the market. Our millennials, you know, all the boomers got, you know, they're all set, but you know, these millennials are like, you know, are having a tough time right now. So,
Yeah,
but yeah,
we're the generation that got shafted, man.
I know, right? But that's more in the next video. Next video, we'll talk more about that.
Yeah.
Yeah, but yeah, so
Long story short, we don't think there's gonna be a housing crash, right, Calvin? And then
uh,
yeah, I think that's our hot take. No housing crash. But that also means that you ain't gonna get a home anytime soon, unless you're pulling in the El Chapo money. You know what I'm saying?
exactly.
Oh man. All right. I guess we'll catch you guys in the next one, because next week we're gonna have a video on why is there why is the house home prices are going up? Like, why is it going up?
Supply and demand. Yep.
All right. So talk to you guys next time. Peace.